Hey everyone, welcome back to Corporate Decoder. Today we're cracking open a proxy statement from One Stop Systems, a company that sounds like it sells everything but actually specializes in high performance computing. It's a bit like finding out the everything bagel only has poppy seeds. We'll look at who's running the show, what they're getting paid, and what big decisions are on the table. This is a definitive proxy statement, meaning it's the final version before a big meeting where shareholders get to vote. Think of it as the cheat sheet for the annual company powwow. Mark your calendars. The annual meeting is scheduled for May 14, 2025. It's going to be a virtual event, so no need to book a plane ticket unless your computer lives somewhere exotic. Shareholders will be voting on electing directors, picking an accounting firm, and giving their thoughts on executive pay. Time to dive into the key items up for a vote. First, there's the election of 6 directors. It is like picking the all-star team for the company. Then shareholders will vote on whether to stick with Haskell & White LLP as the company's independent accounting firm. They check the company's math. Finally, there's a non-binding vote on executive compensation, meaning shareholders get to say if the boss is getting paid too much, too little, or just right. The company wants directors with integrity, good judgment, and skills in areas like technology, finance, and risk management. It sounds like a superhero recruitment drive, but for board members. They look for people with experience in similar industries and make sure they are following SEC rules. Let's meet some of the nominees. Kenneth Potashner, the chairman, brings a wealth of experience from other tech companies. Mike Knowles, the current president and CEO, has decades of leadership in aerospace and defense. Greg Matz is a financial whiz with experience as a CFO for other public companies. Mike Dumont, a retired vice admiral, brings expertise in government and risk management. Mitchell Herberts has senior executive experience in the defense industry, and David Bassett, a retired Army lieutenant general, knows a thing or two about military armonization. These candidates have a diverse set of skills. It is a team with a lot of experience in both the tech and government sectors. To get elected, directors need a plurality of the votes cast, meaning the nominees with the most for votes win. Ratifying the accounting firm and the advisory vote on executive pay require a majority of votes cast. Abstentions don't count, so make your voice heard. Now let's talk numbers. Haskell & White billed the company $272,500 for audit fees in 2024, which is more than the $248,282 in 2023. It also cost $5,000 for audit-related fees in 2023. This is important. Shareholders have to approve this. Time to talk about the money. The board is asking shareholders to give a thumbs up or thumbs down on how much the top executives are making. It's not binding, but the board will take note of what the shareholders think. Here's who owns the most stock. Lynrock Lake LP owns 9.5%, Steve Cooper owns 8.8%, Horton Capital Partners Fund LP owns 5.4%, and Barclays PLC owns 5%. It is good to know who the top shareholders are. The board has 3 main committees: audit and risk, compensation, and nominating and corporate governance. The audit committee is in charge of making sure the financial statements are accurate. The compensation committee decides how much the executives get paid. The nominating committee finds and recommends people to be on the board. The company has several key governance documents available on its website, including a code of business, conduct and ethics, corporate governance guidelines, and committee charters. These documents help ensure the company is run ethically and responsibly. Here is how the directors are getting paid. Kenneth Potashner, the chairman, got $54,879 plus $45,969. Japio $5,909 in stock awards. Total of $89 in stock awards. Totaling $94,909 in stock for a total of 19 plus $45,909. $45,909 got a 41,009 tons, and Mike Dumont got $41,159 plus $45,909. Demont got $41,109, $48,1990 in stock awards, totaling 99 Demonts in stock awards, totaling 94,019 plus $45,909 $41,009. Greg Mont got $41,059 plus $45,990. Mont got $41,149. 1,080 Mont got $41,109, 41,150. Let's meet the top dogs. Mike Knowles is president and CEO. Daniel Gabel is chief financial officer. And Jim Eisen is chief product officer. These are the people steering the ship. Mike Knowles, the CEO, made $473,446 in salary, plus a $50,075 and $280, $65,447.80, $75,000 bonus, and $965,443 to $197,000.1729 in salary, a $22,078 bonus, and $97,001, and $97,000 for other ones, and $95,200 and made $37.1875. That made $336,343.78 times 7 to 46 dollars in salary, a $75,200 in stock awards, which amounts to $206,517 in stock awards for a total of $480,206,543, $75,000 bonus, and $95,200 in air salary, a $75,000 bonus, and a $95,000. Mike Knowles' employment agreement lays out his salary, bonus potential, and severance package if things don't work out. He also receives stock options and restricted stock units as an inducement to join the company. The company offers a 4-day 1-CASA plan where employees can defer up to 20% of their pre-tax earnings. The company also makes matching contributions, which are like free money for retirement. In the event of a merger, stock split, or other corporate event, the company will adjust the stock options and awards to prevent anyone from getting an unfair advantage. It keeps things fair. Here are the outstanding equity awards. Mike Knowles has 250,000 unexercisable options and 131,450 shares. Jim Ison has 44,300 unvested shares. And Daniel Gabel has 40,000 unvested shares. Here is some numbers for pay versus performance. In 2024, the CEO's pay was $855,443, and the average pay for other executives was $34,433 and $345,573 and $398. The net loss was $13,295.1060. The net loss was $6,716. The net loss was $6,745.58 and $503 CEO's pay was $2,050, $716.25 The net loss was $6,716. The net loss was $6,745,573,335 and $2,034,173,300.950. The company states they aren't aware of any related person transactions exceeding $120,000, ensuring transparency and preventing conflicts of interest. Based on their review, they believe all executive officers, directors, and greater than 10% stockholders complied with all applicable filing requirements. Want to know even more? You can request a copy of their annual report for a deeper dive into the company's performance. Overall, One Stop Systems seems to be focused on aligning its leadership and corporate governance with its strategic goals. The emphasis on experience in both the tech and defense sectors could position them well for future opportunities, but only time will tell. One notable risk is their significant net losses in both 2023 and 2024. If the company fails to reverse this trend, their future is questionable. Thanks for watching Corporate Decoder. If you found this breakdown helpful, be sure to like, comment, and subscribe for more deep dives into the world of corporate filings. Until next time.